Hey guys, what is going on? Welcome back to the channel. Again, I want to thank everyone for your support on the channel. All the viewers, all the subscribers, immensely appreciate the support. Today, I thought I would do another request video, this time from a viewer on the channel, a new investor on the stock market per his comments, that's wondering about FANG stocks. What are considered FANG stocks? What are the companies, and then are they good stocks for new investors to allocate their capital or put money into? So I thought I'd kind of go through what a FANG stock is, and then are they good investments moving forward? So as you can see up on screen here, I have all of the FANG stocks, and there are two different acronyms, FANG and then FAANG. I'll be talking about the FANG companies. First one up on screen here, as you can see, is Facebook, FB. The second one is Amazon, AMZN. And then if the acronym has two A's, Apple would be the other company. Netflix, NFLX, as well as Google. It has changed its name since its acronym was coined up. It's now Alphabet, but those are the FANG stocks. So Facebook for F, Amazon and Apple for A, Netflix for N, and then Alphabet here, Google for G. So if we take a look at all of these companies, they are all technology companies for the most part, including Facebook here. If we take a look at the performance over the 1 year time span, you can see tremendous performance here, 21.75%. Amazon as well, 81%. Netflix, because of some recent performance, is up 113.84%. And Google here, probably one of the older companies in the list here, is up 29.68%. I also included VOO here, which is a great index fund, a good marker for the overall S&P 500 index or the overall stock market. And you can see over the past 1 year, this is up 16.51%. So Google here, Netflix, Amazon, and Facebook are all up over that 1 year period there. Again, 21.75, 81%, 113.84%, and 29.68%, with the overall market around 16.5% or so, which is still about twice what it historically has done over a 1 year time span. So now let's go back to Facebook again. And you'll also notice that each of these companies does not offer a dividend, and they have very high price to earnings ratio. They are very expensive companies. Facebook here, as you can see, PE ratio 31.986 with a 0% dividend yield. And the other thing that is characterizes all of these companies is that they are very large cap companies as well. As you can see here, Facebook, $537 billion. Amazon here, again, you can see it does not have a dividend yield. The PE ratio is extremely high for Amazon, 251, and the market cap there is $761 billion. Netflix here is probably the smaller company out of the four. You can see on the bottom there another incredibly high price to earnings ratio, and this really tells you how much an investor is willing to pay for a stock. So the more they're willing to pay for the stock versus earnings, the more expensive a stock is. And as you can see here, the PE ratio, for example, on Netflix is 250, which means an investor is willing to pay $250 for every $1 of earnings. Incredibly high. You can see it's a large company, but not as big as the other companies, $138 billion. And then Google here, again, very high price to earnings ratio, 61.25, a 0% dividend yield, and a very large market cap, 787.09. And if we go back to A here, I don't have it up on screen just because I have it in my portfolio, but Apple, AAPL, has a dividend of 1.557. So this is the longest running company, and this is why I have not included it in the FANG stocks or the FAANG acronym, sticking with the FANG, just because it's a little bit larger company, and it's a little bit more developed because it does have a dividend yield, and the PE ratio is much lower at 18, but it is the largest company at $904 billion. So the largest company, but a little bit more mature with a lower PE ratio and a dividend. So I have not included it in these particular stocks, sticking with the FANG acronym. So Facebook here, as you can see on the bottom here, as everybody probably knows, this is a social networking platform, and it is still in its infancy. You can see here the earnings have really been taking off over the last quarter or so, and I think you'll kind of see this in each of these companies as well. Amazon, the large online retailer, has also had very good growth, increasing its earnings over the last quarter here as well. Netflix right now is increasing its earnings, and I do believe Q1 2018 will have spectacular performance with regards to earnings. And Google here, probably the most mature out of the 4 companies here. Again, you can see the Q4 earnings rising as well. So each of these companies is a newer, up-and-coming company that has a little bit more risk in the investment. So with any investment on the stock market, risk equals reward. These are some of the more risky types of stocks. These are considered growth stocks as opposed to more mature dividend stock, which is what kind of Apple is developing into. So these are high risk, high reward. And with an upcoming correction or pullback in the stock market, not quite sure I would jump into these stocks. But again, just want to point out, I am not a market professional. And to be quite honest, I probably made a mistake early on in the portfolio. If I would have known this kind of performance, I did think the market was going to correct last year. It did not do that. I probably would have put more money into these types of stocks. Right now, I'm very heavy in pharmaceutical companies, as well as some contrarian and speculative plays, Portola Ford, as well as a few others. And a lot of the trading I do is dividend capture, swing trading. Swing trading actually is probably the predominant type of trade I do, and I like to get into companies that have good dividend yield, so if I can't get out of a trade right away, I can hold the company, pick up the dividend, and then sell off the company in a positive swing trade later. You just can't do that with these types of stock because there is no dividend yield. But again, you trade that off for the tremendous performance. And again, I do admit that this was a mistake not putting money into these types of stocks. I do have money into similar types of stocks, but none of the FANG stocks here other than Apple. I did have a little bit of money into Amazon last year, did a couple swing trades, but saved that, have not put significant capital into any of these companies. And the other thing I would say is that if there is a correction in the market, if the market does become a little bit more of a bear market, I do believe these stocks will drop a little bit more than the overall S&P 500. Again, the FANG stocks are way above the 16.51%, which here VOO is sort of representing the overall market. I do believe that these stocks will fall in more than comparison to VOO, but I still think these are good stocks for the longer term. So those are the FANG stocks. Just really quickly wanted to introduce those here. Didn't really want to dive into any of the analysis for each of these companies. They are very similar in their underlying compositions. They are primarily technology companies, growth companies that have very large market caps, very high PE ratios or price to earnings ratios, meaning they are very expensive and they do not have any dividend yield at this point. When they start maturing more like Apple, they may offer a dividend yield in the future, but right now they're putting all of their excess capital back into the company to grow the companies. So those are the FANG stocks. Let me know if you guys have those in your portfolios. Again, I admit that I probably should have put at least a proportion of this portfolio into these types of stocks. They would have been phenomenal swing trades and phenomenal buy and hold stocks over the longer term, but still might get into those. But I will probably put money into the FANG stocks here if the market does pull back. If it does pull back, I will guarantee you that I will put money into these stocks. But up until that point, I'll probably continue doing the swing trading that I'm doing with some other types of companies with dividend yields. But I think these are very attractive companies moving forward here. Again, Facebook, FB, Amazon, AMZN, Netflix, NFLX, and Google, GOOG. Again, let me know if you guys are in these stocks. And not to make the video too long, I'll kind of end it here. Again, if you guys have any questions about this video, other videos, please let me know in the comment threads down below, and I'll do my best to get back to you guys as quickly as I can. So kind of with that, I'll end the video, and we'll see you guys next time.